for update on today's equities trading. Let's cross over now to the Nigerian stock market, where Temple is all ready to give us the update. Well, Temple, good afternoon. Bring us up to speed with the developments in the market.
Well, Chimeze, nothing has changed for good. We're still seeing the market in the red zone, down some 0.29%, although it has moderated at that position right now because it was earlier on, the losses were actually way more than that. We're seeing losses again across board, across almost all the sectors, except for the oil and gas segment, which has seen some 0.13% gains so far today, and that's on account of some kind of interest and demands that we're seeing around O&O. O&O is now about 4 naira 83 kobo, and it's probably going to hit 5 naira today. The major driver for that demand is because yesterday there was a hint from the MD of that particular company, giving a sense of the plans they have come Q3, Q4 2019 around the need to raise fresh capital, and of course giving some kind of analysis explanations around their debt reduction strategy and how that has also improved their performance in 2018 financial year. So the company looks to raise this fresh capital at the end of the day to be able to totally pay up the whole amount of money that has been taken in by way of debt from banks and other sources to clear the backlogs around the ConocoPhillips asset acquisition, which took place a few years ago. So all of those comments that the CEO actually churned out yesterday at their meeting is one of the key reasons why we're seeing demand for this particular company right now. So for other sectors, things are really bearish. A bit of gains around the Nestle PLC, given the huge loss that we saw on that company a few days ago, which was really, really dramatic. And so we're seeing a bit of recovery in that segment now. But for a whole lot of other companies, the banking names, they're all down right now. The industrial goods segment of the market, Dangote Cement is currently down. And basically the sell-off is everywhere in the markets. Everyone can actually feel that. And we don't really see anything changing this perception for the rest of the day, Chimeze.
Now, are there alternatives investors are perhaps looking at now, considering the supposed reduced interest in the equities?
Well, I think a few alternatives that will be considered now will be the mutual funds that some of the fund managers currently have. You see investors trying to buy into it because these are some of the securities that a lot of the fund managers can actually help manage better for a lot of retail investors, where you can actually mitigate the risks that will have come directly to these retail investors in the market by way of direct investment in equities. So you see investors going more for mutual funds. Some investors will also be exploring the opportunities in the fixed income space, talking about treasury bills. Yesterday we know that the central bank held a bit of an OMO auction where some allotments of about 94 billion or thereabouts took place. So if we see more of these OMO auctions going forward, then maybe that is an area that investors will be considering. We're not so clear about some commercial papers that some listed companies were also expected to float, but we know that there's been a bit of an update on that of UAC or UPDC in collaboration with flour mills that this is something that has been in existence since 2016. So I'm not sure there's going to be really any CPs in the market. But if it is something that investors are actually looking out for. A lot of investors are currently holding their money to see where opportunities will surface from, and then they can quickly attack by investing in it. So basically, the market right now is really weak. Things are generally weak, and until a good opportunity just emerges in the market before you can then see where you can quickly want to put in your money. Basically, rates are not so attractive at this point in time, and prices in the markets are low. For those that have actually exited market before now, this is an opportunity, though, for them to come into the market, because if you look at the existing macroeconomic fundamentals, they look quite positive. So for now, a lot of the investors are currently waiting and watching, sitting on the fence. Let's see how things go, keeping fingers crossed before they then put their money on ground, because these are hard-earned funds, actually, Chimeze.
Well, Temple, I just can imagine. Let's continue to keep our fingers crossed and hope for the best. Thank you. Well, on that note, that we draw the curtain on today's edition of the program. Thank you very much for watching. I'm Chimeze Iwabu.